It is time to hit social media, however, for our hashtag segment. For that, we'd like to welcome in Landon Swan, the co-founder of LikeFolio.com, and we have Jenny Horn alongside us as well here in studio. Jenny, we're going to be talking some GrubHub.
GrubHub ahead of their earnings, yes. So Kevin Tanks, you tweeted earlier this week that this was the week of millennial earnings.
Yes.
And I think GrubHub is kind of the beacon of that. I mean,
Absolutely.
I think this is totally in our wheelhouse. We were talking before we went on air about how you choose your delivery service, because it seems like there's so many in this space now, and they offer you all different kinds of discounts and fees, and I always just pick the cheapest one. I don't think I have an allegiance to one, but I think that's kind of the problem. I looked on social media this morning about how people choose their delivery service, and it seems like there's just general unhappiness with all of them.
Just so you know, I'm going to start this out with, so I have never used any of these services.
I'm not surprised.
Never. But when I was young, when I was your age, living in downtown Chicago, there was once a hot dog restaurant that said, if you order $10 worth of food, we'll deliver for free. And I ordered 2 hot dogs, a large order of fries, and I said, enough root beers to make $10 and deliver it.
$10?
That was my entrance into food delivery.
And of course, pizza
was 8 root beers and 2 hot dogs.
Space for years and years with pizza delivery, but that's, to me, I wonder what other things have been impacted by this?
I know, I feel like the restaurant space, I mean,
Sure.
It's really interesting because if you're a restaurant now, this seems like the actual restaurant themselves are unhappy with these third parties because they're paying so much in all these fees, and then the drivers are unhappy. It's just kind of a general unhappy space, it seems.
Just remember, there was a time when only pizzas got delivered.
Right. And
now everything gets delivered.
You can get anything delivered.
Right.
So our first tweet is from Howard Penny, who says, nearly 25% of third-party deliveries disappoint, making delivery and the use of apps one of the worst consumer propositions to hit restaurant industry ever. So I saw this tweet a bunch of different times in different words. So Landon, I'm curious if there's just general unhappiness in this space as a whole. Is this a dying industry? I mean, all of these names seem to have some kind of unhappiness.
Right. I'm going to take the over on that 25% disappointment. Our data shows that it is much higher. In fact, when you look at the happiness for the 4 big food delivery companies, it's actually worse than airlines, which is crazy. I mean, we used to think that airlines were the epitome of unhappiness, but food delivery is actually worse. And so when we look at that chart, you can see, I mean, this is just a huge downward trend. All of them, 3 or 4 years ago were at 65, 70%. It's like, hey, you're getting food delivered. Why wouldn't you be happy? But the wait times, the costs are just driving people away, and they're just very, very unhappy. When you look at GrubHub specifically, they have lost the most happiness over the last year, losing 16 points of that happiness versus the others, which have lost between 10 and 15. So they're the worst, but they're all losing, and it's mostly because of fees and wait times. When you look at the wait times, Uber and DoorDash are around 30 minutes on average. Postmates is around 50, and GrubHub is about 70 minutes on average, which if you're hungry, 70 is a long time to wait for your food. So people are very, very unhappy with these services.
All I can think of is my youth on this planet, and 70 minutes? If this is the end of the night and I'm ordering food, which would have been my window when I ordered food, I'd have been asleep. 70 minutes is a deal breaker. If they said 7 minutes, I'm like, pass. I go to the pizza rolls in my freezer.
Well, they don't tell you 70 minutes. It just ends up being 70 minutes.
Oh, that's
they tell
even
you
worse.
30, and then you're really unhappy because at the end of the night you're asleep. They ring the doorbell, maybe you miss your food. So yeah, it's a problem for sure. They need to work on efficiency. It's a big problem overall for the companies.
Landon, what does the French fries taste like after 70 minutes? That cannot.
I know,
come on.
And those are the ones that the driver didn't eat.
Yeah,
right?
exactly.
Landon, when I look at that chart, I don't think we've ever seen something when we're looking at this, maybe the airlines, but even there's some divergence. This is clearly an industry-wide trend. I mean, this sentiment chart is about as correlated and close to 1 as I've seen on your guys' data. When you see something like that and you don't see it improving, how concerning is it for basically the whole entire industry, not just these names on their own?
Yeah, it's extremely concerning. And you're right, airlines are low, but they kind of hold their lowness, right? They're not falling. They're not getting cut in half over 4 years. So one of the things that we look at is happiness, and that is actually for us a longer term predictor. Purchase intent, which we often talk about, is a shorter term predictor of success for a company. Happiness is longer term because either people get frustrated with it, or they leave the company, or they love it and they keep going. When you look at purchase intent, it is a huge difference because we've got GrubHub that had a massive lead back in 2014. If you look at the far left side of that chart, there's nobody else playing the game. And then all of a sudden, they basically just get taken over by competition. They've basically been sideways while everyone else is doing a better job at executing better customer satisfaction. GrubHub is the one that charges the least, but with those wait times, people are unhappy and they're going elsewhere.
Yeah, I definitely think that when you're always going to be comparing when you're ordering food, and I'm not ordering at night. I'm always ordering on like a Sunday, I think. So the wait time is still, I mean, different purposes.
Sunday is correlated to the night. It's the day after the night.
That's very true.
I mean, you know.
But I have to say that Uber's scale is really helping Uber Eats because they lost $1 billion in operating expenses in 2019. But of course, it doesn't really impact Uber as much. I mean, it's not great for Uber, but Uber's a bigger company versus GrubHub. It's like, how are they ever going to make money? Their path to profitability seems
all their
so
eggs are in
unclear.
this basket.
Exactly. I mean, it's just, and they're down 32% in the 52-week period. I mean, it's just the earnings aren't looking strong, and the street is not super positive on this, to say the least. But I mean, Twitter is just hysterical because people talk about all the different things they ordered, like you all mentioned French fries. That's so funny because that's exactly what my next tweet says, kind of. So our next tweet says, the Postmates layoff story is interesting for names like GrubHub. People are learning a lot of foods do not taste as good at home as they do at the restaurant. Grub positioned well in stuff that does taste good, pizza, sandwiches, and Thai. Might dip my toe in here. I thought this was so funny because this goes into exactly what you said about that. But looking at this stock going forward, Landon, I mean, how will they ever make any money? It just seems like this is a dying space, and you're seeing such a decrease in happiness, which is obviously a terrible thing. So do you think we've seen a bottom, or do you think this is, as Kevin always says, a long goodbye?
You know, it reminds me a lot of Groupon. It's just a business model that's fantastic initially, gets everyone excited, but then the reality of it, you're not able to deliver what you need, and it kind of gets old after a while. I would say it's more towards the long goodbye. However, if they can ever get to the point where they've got driverless cars and their fees go way down because of that, and they can improve their efficiency and work more closely with these restaurants, then it could turn around. However, I don't think it's going to be GrubHub long-term that does that. I think Uber is the more likely candidate to win that because of their sustainability, because they do so much more. And so they're the ones that I think could be turning profit on not just food delivery, but item delivery or other things like that. They've done a very good job of just flipping the switch and turning on food delivery. And I think that they're showing the ability to weather this storm until driverless comes around. But until then, this is a very tough space. You know, we often have talked about Domino's being really stubborn with their delivery methods, not going with one of these food delivery services, but they're starting to look correct in this because it's just unsustainable. They're losing a lot of money. It's just tough to keep customers happy. I know GrubHub is profitable. They just turned a small profit, and their PE ratio is now about 1,300. So people that are fundamental analysts may not like that too much.
Landon, so a couple things. So first off, we talked a little bit about Disney Plus, and when a product's new, the happiness and the excitement around it a lot of times is more inflated, let's say, and then it kind of wears off. How much of that is kind of an effect that we're seeing here? Because clearly the consumer purchase intent mentions are growing still for the industry, and I don't see people wanting, okay, if you give them the alternative, do you want someone to drive it for you for free or for $4, or do you want to walk down the street in the wintertime and go get whatever you want? I don't see that coming back either. So we'll talk more about Uber tomorrow, kind of teasing to tomorrow's show with you guys. But thinking about GrubHub or the industry as a whole, like this does seem to be a movement towards, people wanting to be lazy and have things done for them.
Yeah, it's the American way, right? But I will say that on the purchase intent, I think the streets got them expected to be about plus 2% quarter over quarter on revenue. We've got it higher than that. We're about plus 15%. They're the weakest of the four as far as growth goes. I'm not sure what real expectations are, if those analyst expectations are expected to be beat. But all in all, I think that long-term, the happiness is a huge negative for this industry as a whole. They may beat on revenue. I'm not sure how expenses are going to come in. That's very important for these kind of companies as well. I think overall, we're bearish on this earnings report coming up, despite the fact that we see purchase intent a little bit higher. That happiness is just really a big red flag.
Landon, I like that you mentioned Domino's because I actually ordered Domino's just through their app, and it was the fastest delivery I've had in months. It was like 25 minutes. So I like that you mentioned that because I'm just a healthy consumer and I order from all of these different websites.
Yeah, Domino's has got it down. They figured out they've got the technology, and they're being stubborn. They see the writing on the wall as far as using these services because, a lot of times if the consumer is unhappy with GrubHub or Postmates or whatever it may be, they kind of carry that sentiment along into the restaurant that they ordered from because maybe they're not sure if it was the service, the delivery service, or the restaurant who made it a really long wait. So Domino's is controlling that narrative, and I think that's actually may pay off for them long term.
And I actually want to kind of provide some more information here too, given your bearish call. This stock's rallied like 70% just since November as well. So you would have the opportunity, at least in the near term, to be potentially getting short into some strength in the stock. But Landon, kind of closing thoughts here. This is more for me. You gave some stats on kind of the wait times for each one of these. I need to make sure I have that in my head so I know which one to use.
Yeah, Uber and DoorDash are the fastest by far. If you want, and they're kind of the middle of the road as far as cost. I think they're around 20% of the food cost. GrubHub is only 12% of the food cost, but apparently you get what you pay for. And customers are not happy with those wait times. So looking at purchase intent, DoorDash is killing it. Uber Eats and Postmates, not bad. GrubHub, really terrible.
Alrighty, we'll continue the conversation tomorrow with some Uber talk, but thanks to Landon and Jenny